Today on RoxomTV News, President Trump takes over primetime to promise relief, blame Biden, and fact-checkers immediately clock in for overtime. The U.S. drops a $10 billion weapons package on Taiwan, and China responds by reminding everyone why geopolitics is the world's most expensive chess game. And Australia moves to rewrite its hate speech laws after a deadly anti-Semitic attack, reopening the global debate over free speech versus public safety. All that and more right now on today's show. Let's go. Good morning and welcome back to another edition of RoxomTV News here. It is Thursday and our first story begins in Washington, D.C. inside of the White House, as last night President Donald Trump delivered a rare, roughly 20-minute primetime address from the diplomatic reception room, framed as a national update but functionally closer to a campaign-style performance aimed at resetting public perception of his presidency. The speech came amid persistent voter anxiety about the economy, rising political pressure, and worsening indicators around affordability. The exact moment when tone, credibility, and clarity matter the most. Now, Trump's economic framing followed a familiar structure. He opened with the claim that he inherited a mess and has spent the past 11 months fixing it, repeatedly tying today's economic pain to former President Joe Biden and Democratic governance. The strategy? Well, it's pretty straightforward. If voters believe the damage predates Trump, they may grant him more patience. The problem is that polling cited in the analysis shows voters currently hold Trump far more responsible for present economic conditions than Biden by a wide margin. That makes the pitch, well, difficult. Trump is asking Americans to accept that things still hurt, believe improvement is imminent, and redirect responsibility elsewhere, all at the same time. Trump insisted that prices are coming down fast, pointing to gasoline, cars, hotels, and airfares as evidence. Government data complicates that picture, however. Because while inflation has slowed down from earlier peaks, prices for most goods have not meaningfully declined, and affordability remains a top concern across polling. And one of the big topics on the docket was the economy and affordability, the claims versus the actual data. Now, Trump insisted that prices are coming down fast, and he pointed to gasoline, cars, hotels, and airfare as evidence. Government data, however, complicates that picture. You see, while inflation has slowed from earlier peaks, prices for most goods have not meaningfully declined, and affordability remains a top concern across polling, including among Republican voters. Trump went further than arguing inflation is slowing. He essentially promised deflation, meaning prices would actually fall. Now that distinction matters because slowing inflation reduces the pace of price increases. Deflation means prices go down. The latter is far harder to achieve without serious economic side effects, and it immediately raised skepticism among economists and fact-checkers alike. Now, tariffs were presented as the engine behind nearly every positive development that Trump cited. He described tariffs as forcing companies to return manufacturing to the United States and claimed that factories were being built at unprecedented levels. However, reporting cited in your source material here would show that factory construction spending has actually declined since peaking back in 2024, and tariffs have generated revenue. So customers' data shows that more than $200 billion has been collected between January and mid-December. But economists note that American consumers are absorbing as much as 55% of tariff-related costs, undermining the idea that tariffs are painless or purely foreign-funded. Now, this is the central tension of Trump's tariff strategy. They raise money, but often by raising prices. Now, the most headline-grabbing announcement must have been Trump's unveiling of a warrior dividend. He promised $1,776 payments to more than 1 million service members, saying the checks are already on their way and would be funded by tariff revenue. Now, this announcement carries immediate political weight, but it also raises legal and procedural questions. Tariff revenue belongs to Congress, not the executive branch, and any direct payments require congressional authorization. Supporters see that announcement as a policy signal, but critics see it as a promise that may collide with constitutional spending authority. Either way, Trump publicly allocated money that he does not control outright, a move that escalates both expectations and political risk. The military payments were not the end of the spending roadmap either. Trump suggested tariff revenue could also be used to reduce income taxes, compensate farmers for trade losses, and make payments to average Americans. Here's the small problem, though. Those promises stack on top of each other, and the reporting notes that the administration is also facing a Supreme Court case that could force refunds of tariff revenue to companies depending on the ruling. Now, if that happens, the pool of money Trump is promising to distribute could shrink or disappear entirely. This turns tariff revenue from a funding source into a political gamble. Now, Trump also teased an upcoming announcement for a new Federal Reserve chair, saying he would choose someone who believes in lower interest rates by a lot. That line was not casual either. Markets, they pay close attention to any sign of political pressure on the Fed, an institution designed to operate independently. Now, lower rates can stimulate growth and ease borrowing costs, but they also risk inflation credibility if pushed too aggressively. This remark signaled a preference for faster financial relief and potential tension with central bank norms. Trump tied his economic message directly to immigration enforcement. He argued that mass deportations would create more housing and more jobs for Americans, presenting immigration not just as a broader issue, but as a cost of living solution. Supporters argue this is basic supply and demand. Critics, however, argue it oversimplifies labor markets and housing dynamics. What matters politically here, though, is the framing. The White House is positioning immigration as an economic fix, not just a cultural or security issue, raising the stakes of every future enforcement action going forward. Now, despite reading from a script here, the speech featured a long list of claims that failed basic fact checks. Trump claimed inflation was the worst in history when he took office. It was not. He claimed that gas prices dropped below $2 in many states, while data shows national averages are around $2.90, with no state below $1.99. He also claimed drug prices fell by hundreds of percentage points, mathematically impossible, as he stated. He claimed trillions more in secured investments than his own administration has actually tallied. He also claimed employment was at an all-time high without acknowledging population growth or rising unemployment, which recently hit 4.6%, a 4-year high. Now, each individual claim matters less than the pattern here because credibility, it compounds, and so does doubt. Now, analysts of the speech highlighted the delivery as being rushed, loud, and just kind of overall difficult to follow. Trump moved at a blistering pace, stumbled on the teleprompter, and even misread the number of service members during the dividend announcement. After the speech, he reportedly asked Chief of Staff Susie whether he hit the timing mark, reinforcing the impression that the address was about squeezing content into a window, not reassuring an anxious audience. A primetime address is supposed to calm nerves. This one, well, it overwhelmed them. The address contained little genuinely new policy information outside of the military payments and vague housing reform promises for next year. Much of the content mirrored Trump's rally rhetoric and Oval Office remarks. That makes the decision to go primetime significant, because when a White House uses national airtime for familiar talking points, it often signals concern about public perception rather than actual policy rollout. In other words, the speech itself was the message here. Now, Trump's address outlines how the White House plans to talk about the economy heading into 2026. Blame will remain backward-facing. Relief will remain just over the horizon, and tariffs will be framed as both a weapon and wallet. Fact-checking will continue to clash with the messaging here. For viewers at home, this matters because expectations, they shape confidence, and confidence shapes spending, voting, and trust. If the claims continue to overshoot reality, future announcements will be discounted before they even land. And if the administration keeps reaching for prime time without offering clearer answers on affordability, housing, and other things, then, well, we'll see how this all plays out. All right, joining us today to talk about this story and others, we have the man that can connect the dots like no one else, Nolan Bowerly, joining us today. Nolan, happy Thursday. How are you? Thank you for joining us. Nolan, I can't hear you yet, my friend. We're having some difficulties here. I'm getting no audio from you just yet. There we go. We're back. I can hear you now. So how are you doing, Nolan? Thanks for joining us this morning.
I'm enthusiastic about the future of humanity. I am very bullish on our direction. So Yeah, with Trump's address last night, first thing, on your last comment about Trump's ability to continue to sell prime time to an audience if they disappoint, that's partly the way this was
Hmm.
architected. There's already two solitudes, right? Trump is not able to speak to half of the American population directly. Half of the American population
Hmm.
tunes in directly. Half the population hears everything through a filter, legacy media, or whatever filter. So Trump is already up against that. That's why he ran that kind of head fake yesterday, where he said he was announcing war, got the entire attention of more viewers than you would normally get, and then started to list things
Mm.
that people never even heard about. So Trump doing typical Trump theater, right? When you come into Trump's staging of events, you're back at the you don't have the card Zelensky. You're back at him showing kill the
Hmm.
boar. You're back at him luring everyone
Hmm.
in to see the Trump greatest show on earth. And so that's what he did yesterday. Now, of course, always
Yeah.
like Trump, you're always directionally true, but maybe in the specifics, it's typical Trump theater. It's big, but maybe not as big in reality. But the important thing that he was underlining yesterday, I think, especially when he was driving into the Federal Reserve pieces, is that structurally, simultaneous to this speech, you've had several huge announcements from the administration, in particular Bessent, about the Financial Stability Oversight Committee, more or less the financial direction of the country as viewed from Treasury and how they integrate with markets and New York City and everything
Hmm.
like that. And it was very clear in this document, instead of banks being favored, and it came through in the speech yesterday, it came through in the Warrior dividend, they're going to be focusing on household stability, household income, household financial positioning. Now, inflation is baked in. There's probably no way Trump can get away from that, but he can favor different industries. Staying the way he's doing it, basically housing affordability, more or less changing housing's role for banks and the relationship that it has with Americans across the board. So this was actually a very big speech in the sense that you had a bunch of people who've never heard this stuff before, and he reiterated within the speech, within the context of the speech, a totally new direction for the American economy. So it was bigger than he
Hmm.
let on, and the scam of the Venezuela leak that he was announcing war was typical Trump theater.
So, am I understanding this correctly? When you feel like this was maybe a bit of a bait and switch, he kind of teased that this would be about, I think a lot of us thought it'd be about Venezuela, but instead he kind of used it as an opportunity to promote his own like previous campaign rhetoric and like, look what I've done in the past year, even though a lot of the audience out there is a lot of people have been feeling certain ways about this first year. So was this really more of an effort to combat the rhetoric around his first year in presidency more than anything else?
I think it was more about framing 2026. So when he
Mm.
approached the way, he set up the framework that we'll see going forward in 2026. So everything
Okay.
he mentioned in the speech is going to become the fault line for 2026 midterms. So it was more of a
Hmm.
outlook to 2026 than it was a resume of 2025, even though there was a resume of 2025 in it. But resuming
Hmm.
25 or creating that summary of 2025 was more about which of those storylines continue into 2026, housing and affordability, as we've seen from the success of Mamdani. That was excellent branding. And Trump wants to own that branding. He wants to bring, that's why he's tried the affordability is a scam. I don't think that's going to work. He's going to have to actually embrace the whole concept of affordability and win that fight. That is the fault line of the 2026 election and the midterms. So he's going to have to go hard on housing. Inflation is baked in. So American consumption habits are also changing at the same time. There's probably no way away from a lot of that inflation stuff. It's going to hit different parts of the economy, whether he likes it or not. That's just reality. So he's getting out ahead of that argument and is anchoring everything in food. It wasn't just him saying that the prices have gone up. Along with this FSOC, you've seen Peter Navarro talking about the meatpacking monopoly that exists in America. You've heard RFK suggest a few times that small decentralized farming should be promoted by the government, by the administration, in order to combat the monopolistic practices of Cargill, Tyson, and the largest food packaging companies in the country. So this was something signaled to individual households and not institutions. It had the instead of Wall Street, it really was a Main Street focused speech targeting individual households that maybe haven't heard the good news about what Trump has achieved in the first year.
Yeah, and he definitely touched on the T word that's on everyone's mind the last year, which of course was tariffs. He leaned very heavily on those as being both an economic weapon and a funding source, almost treating them like some kind of national ATM. But historically, Nolan, how sustainable is that strategy once the costs start showing up in consumer prices? Because I know this tariff situation has been a pretty divisive issue for the last year for a lot of Americans out there.
I don't think Trump needs tariffs to go on forever. Part of the tariffs is to choke the previous system. It's to choke those institutions that are all on his side. It's already about recalibrating America's relationship with foreign countries. The tariffs don't last forever. But indeed, the 1776 thing probably is related to the rumors of the Supreme Court ruling against him tomorrow on the predicate he used to do the tariffs in the first place. So there are many people who believe this is to try to get him anchored with people who want these tariffs to come through, especially the military, right? The military, of course, is, ought to be viewed and is generally viewed as an institution in America that isn't political, that, both Democrats and Republicans have a lot of respect for. And if they come out on his side, then it's a big win for him. Now, don't forget, Trump has several other avenues that he can use to go for tariffs. It's not just the thing that is going to be adjudicated tomorrow, rumored in the Supreme Court. That was just one predicate he had to the tariff regime. He's got others, so he can fall back. It won't be the end of tariffs tomorrow. And I don't believe it'll be the end of him trying to gather the tariff money to spend politically. Now, the point you made about Congress being in charge of that money, probably true, but Trump is going to continue to fight against Congress as a failed institution. On the flip side, you see Congress dealing with all kinds of scandals when it comes to campaign finance. We've seen the Smurfs, we've seen the blue slip conversation, we've seen the so-called seditious six have all been caught in the smurfing being you take donors that do small donations across multiple counties, and whether or not it's accurate or honest or true doesn't look like it. We'll find out, but there's plenty of folks getting involved in Act Blue, and there's a red wind, so it's a Republican-Democrat thing. It's not exclusive to Republicans. But the whole concept of Congress is under question. I don't think Trump's very happy with his own Congress, right? He doesn't love his senators. He doesn't love the Republican Party. So you've seen a big split between executive branch politics and legislative branch politics, and Trump is in the middle of that as well. So I don't think, like a dog on a bone, he's going to be giving up the revenue that goes to Treasury anyway, and he's going to continue to try to spend it through the executive branch.
Yeah, it'll be interesting to see how this whole tariff rollout and who's getting the money or where it goes is actually going to play out. But like you said, only time will tell, so we'll keep our eyes on that story. But we're going to move on now to our next story that's actually going on in the Western Pacific power chessboard. Now, this story, though, is actually centered in Washington, D.C., Taipei, and Beijing, as the U.S. announced a massive package of arms sales to Taiwan, valued at more than $10 billion. And China did exactly what you'd expect. The package includes 82 HIMARS systems and 420 ATACMS missiles worth more than $4 billion, plus 60 self-propelled howitzers and related equipment worth more than $4 billion also. Now, it includes drones valued at more than $1 billion, military software worth north of $1 billion, and additional systems like the Javelin and TOW missiles, helicopter spare parts, and Harpoon missile refurbishment kits. So it's a lot. The State Department says the sales support the U.S. national economic and security interests by helping Taiwan modernize its military and maintain a credible defensive capability. Now, Taiwan's defense ministry and foreign minister publicly thanked the U.S., describing the sale as essential to strengthening deterrence and preserving regional stability. Now, this sits inside a long-running, very real constraint. Under U.S. law, Washington is obligated to assist Taiwan's self-defense, while Beijing views the island as part of China and has vowed to reunify it by force if necessary. Taiwan is also planning to raise defense spending to 3.3% of GDP next year and reach 5% by 2030, following pressure from the Trump administration and the Pentagon to spend even more. Now, that push has faced resistance inside of Taiwan, including from opposition parties and public concern over the costs. Beijing's response to this was swift and severe. Let's break it down. China's Taiwan Affairs Office condemned the sale as a grave violation of its sovereignty and a flagrant interference in internal affairs, accusing Washington of breaching the One China principle and long-standing U.S.-China agreements. China's foreign ministry echoed that message, warning the deal undermines stability across the Taiwan Strait and sends dangerous signals to Taiwan's independence forces, while accusing the U.S. of trying to contain China through military pressure. Chinese officials also criticized Taiwan's ruling party, arguing the island is being turned into a military powder keg by relying on U.S. weapons and escalating defense spending. The sale still requires approval from the U.S. Congress, but its announcement alone has already raised regional tensions, coming just days after Beijing warned Washington against any form of expanded military contact with Taiwan. Now, for the viewers at home, this matters because U.S.-China tensions don't stay overseas. They ripple through global supply chains, trade policy, energy markets, and investor confidence, affecting everything from consumer prices to job stability. Taiwan sits at the center of global semiconductor manufacturing, and any escalation in the Taiwan Strait would be felt far beyond Asia. Now, if Beijing chooses to respond more aggressively, the next year could bring sharper geopolitical friction, and historically, that tends to make the world feel more expensive, more volatile, and a lot less predictable. Bringing Nolan back. Nolan, zooming out here, when the U.S. announces an arms package of this size to Taiwan, is this more about military readiness or about signaling credibility in a region where everyone is watching who blinks first? What do you make of it?
I think it's neither. I think America has very few cards left over there. And the big card we have is, instead of what America has been before, which is, colloquially we heard America referred to as the world's policeman. And it looks like that capacity is running out. The gap between first and second, it's not what it was in the 1950s. America can't take the world on alone anymore. They can't be the super mega power that they once were. The cost of violence has changed. The cost of war has changed. America's physical capacity to protect Taiwan is probably zero. They could probably slow the Chinese down. Now, Armageddon, of course, they could probably do a lot, but that's not the world that we're talking about here. So Palmer Luckey mentioned this a little while ago, and if you know who Palmer Luckey is, he's a big Bitcoiner and a big producer of drone armaments, and he cast America's potential new identity from being the world's policeman into the world's gun store. That a more appropriate role for America is to more or less, we can't really affect Taiwan, but we can leave them one thing, which is the Second Amendment and a bunch of weapons. Sure that the shelves are full and you get your choice and you can come and buy and we'll always supply you. And it looks like that's the best we can do for Taiwan. After that, I suspect the American approach is to just let the Taiwanese be the Taiwanese. I mean, China continues to have trouble swallowing Hong Kong, and Hong Kong is not even close to the same level of nationalistic identity, not even the same place as Taiwan, even close. Hong Kong's a much smaller version, an important place, but if you look at Jimmy Lai this week, they're still choking on that bone of Jimmy Lai being arrested, all of that stuff. So I think fundamentally, China has its own risks, and America is just betting that China doesn't have the soft power to go and absorb Hong Kong or Taiwan yet. They've got to seduce Taiwan. I believe eventually there is going to be some form of reconciliation between Hong Kong, Taiwan, and mainland China. I'm just not sure the CCP makes it to there. So again, I often think of the end. Remember, no one watched the end of The Matrix. We always forget the end because it was such a shitty movie, the third one.
Hmm.
If you remember
Yeah.
how it ends, yeah, it was just terrible. Too bad. I like the second one.
Okay.
The third one. But if you remember how Neo
Yeah.
allows himself to be absorbed by Agent Smith, and the actual
Yeah.
code Neo gets absorbed into Agent Smith kills Agent Smith. If you remember, he gives up, and that ends up polluting the system. I think the Communist
Right.
Party of China risks that with Taiwan. So it's not so much American military force that's going to keep them out. It's the same thing that would keep them out
Hmm.
of Japan. Japan is Japan. They're not going to join, and Taiwan, although closer, is going to be bringing with it that same idea of American Second Amendment, the American sovereignty, and all the sort of soft power and cultural things that they've absorbed from America over the past 50 or 60 years. So I think inevitably there's not much that we can do anymore. Taiwan and China probably belong together in some form of arrangement, but
Hmm.
we'll continue to reiterate their unique qualities of the island of Taiwan. And so I think this is the only card left we have out there.
Yeah, and this is an interesting event that's going on right now because the world is watching. Obviously, there are some parallels between Russia and Ukraine, and Taiwan has kind of been like that could be the next type of situation out there. So, with that being said, China's response to this was immediate and furious, but also like very familiar. So, my question, Nolan, is in your view, where's the line between diplomatic theater and actions that actually increase the risk of escalation here? Like, to me, arming Taiwan seems like it's kind of poking the China bear a little bit. What are your thoughts on this? Do they actually escalate things further by this, or did they not? And they actually gave Taiwan some weapons to defend themselves. What do you make of this?
I think it comes down to what China's appetite for pain and conflict are, and I don't think they're great. I think China has a furious response because they have to. It's a saving face situation. They can't be embarrassed. But what's
Hmm.
going on with Taiwan, I'm certain China has an approach that's militant and an approach that's commercially oriented in order to absorb Taiwan. I don't think it changes their calculation. I think when you talk about the invisible line, I think what America is doing outside of Venezuela and South America is probably alarming China a lot more, which is the alignment with
Mm.
Argentina, El Salvador, Chile. You see the American coalition, the American ideological coalition grow. It's an economic arrangement, it's a military arrangement, it's a commercial arrangement, it's a worldview arrangement. These are all countries that want their sovereignty, but that are also realizing financially they don't have all the cards, like Argentina. They're aligning with the American financial system. They're not aligning with the old imperial system of resource extraction. Go back to the way Trump and America circled China just a few months ago. If you remember when Trump took his trips to Japan and South Korea and he met with Xi
Hmm.
over there and he was in Vietnam and Thailand. One of those meetings involved Australia, and Australia at the time signed a deal with the United States that is very peculiar. It was about the rare earth stuff, but it wasn't about just getting more rare earth materials from Australia. They also created an investment regime where Australia would actually be making the magnets, making the high-end manufacturing components that they never would have under the previous colonial imperial resource extraction economy that we've seen for the past 80 years that Canada is a part of and that Australia is a part of and all these other former British colonies are a part of. America gave them the chance to actually make the value added stuff that brings the real money into the economy, the real
Mm.
sales pieces. And that's something that China has owned before, right? They've been good at that. So when America favored Australia in this way, they really sent a signal that Japan or China's actual economic dexterity, its optionality was getting reduced. And so if you remember, Trump went from
Hmm.
each and one of the countries showing China that they can make other deals. The deal they just gave Argentina and this new emergent administration in Chile will be more or less the same. They're going to be free to create the
Hmm.
resources and export the resources, but they're also going to be getting American commercial buy-in to the actual value added high-end components that they would like. So America is actually reconfiguring its whole continent. The security arrangement that America recently announced by bringing together South American Command and North American Command in one particular unit to look at hemispheric command, it goes along with this FSOC document that I was talking about earlier, the financial stability document. Simultaneous document was released by the military talking about the reorganization of American armed forces. And it reiterates the continent is more important. And so that does, I think, China, an understanding of where they lay, and then America's commercial relationships that it's creating with these colonies, former British colonies, former Spanish colonies, former imperial subjects, reorients the entire global security and economic framework. So I think it's one that China is looking at and say, okay, we can handle this. We can do pretty well in this environment. This is better than it was. And of course, they can keep America as a customer in this relationship. You see that Trump was able to make some pretty good commercial relationships with China along these lines. So I expect the commercial relationships with America and China to continue to take supremacy. I don't think America is trying to, destroy China or anything like that. So I think they're going to be able to continue to develop parallel, and Taiwan and China eventually will come together. Now, the CCP, again, like I reiterate, I don't know if they make it.
Right. Yeah. Well, we're going to have to move on to our next story. You mentioned Australia because our next story actually takes place down under here, Nolan, as the government is responding to one of the deadliest acts of anti-Semitic violence in the country's modern history. Australia's Prime Minister Anthony Albanese announced that his government will draft new legislation aimed at cracking down on hate speech, radicalization, and those who promote violence following the mass shooting at a beachside Hanukkah celebration in Bondi Beach. 2 gunmen opened fire at the event on Sunday, killing 15 people, including a 10-year-old girl, in what authorities say appears to be an Islamic State-inspired anti-Semitic attack. In response, Albanese said the government will move to strengthen laws targeting individuals and organizations that spread hatred, division, or incite violence, even if their speech previously stayed just inside the boundaries of what was technically legal. The proposed measures include higher penalties for hate speech, expanded authority to list organizations whose leaders promote violence or radical hatred or racial hatred, and new powers for the Home Affairs Minister to cancel or deny visas to people deemed likely to spread hate or radicalization in Australia. Now, the Prime Minister framed the move as necessary, saying anti-Semitism has increased sharply since the October 7, 2023 Hamas attack on Israel and the subsequent war in Gaza, and that Australia's Jewish community has faced rising threats and attacks since then. Australia already has hate crime laws on the books, including bans on advocating violence based on race or religion, and earlier this year expanded penalties for threatening places of worship and displaying Nazi or terrorist symbols. But officials acknowledged a growing gray zone. Home Affairs Minister Tony Burke said the new legislation is designed to capture individuals and groups who use language that is clearly dehumanizing and unacceptable, but previously managed to avoid crossing the legal threshold into direct calls for violence. Or in other words, speech that pushes society towards violence without explicitly pulling the trigger. For viewers at home, this matters because Australia is now wrestling with the same question many democracies face: how to protect free expression while stopping rhetoric that fuels real-world bloodshed. Where that legal line gets drawn next will shape not only the public safety, but also civil liberties, immigration policy, and how governments respond when extremism moves from online spaces and into the real world. Bringing Nolan back. Nolan, Australia is trying to lower the legal threshold for hate speech before it turns violent. From a governance perspective, how hard is it for democracies to act early without overcorrecting on something like this?
It's always go to hate speech laws. It's always back onto, we've seen it from the original 9/11 attacks and the Patriot Act that came out after. That was surveillance. It was keeping people from saying stuff. It was a form of clandestine censorship. The censorship has grown higher now, yet the killing speeds up. So you can go to any one of these countries in Europe where they arrest people all the time for online stuff. You still can't have a Christmas celebration in Paris. You go to see the Christmas markets in Germany, and they're now all surrounded by cinder blocks because of cars driving through. So the evidence is clear. None of this censorship seems to work. And the other end of the equation, where we see every single time where, you get these clearly trained combatants. Like, where do you get guns like that in Australia? I want to know. So it's
Yeah.
creating a whole, reaction where people are saying, well, look, we're getting out of these fights. The Middle East looks like they're committing to peace. You've got Saudi Arabia, you've got UAE. I was just in the Middle East last week with Israelis and at mosques and people getting along and saying, the Israelis saying, this is nothing like the Muslim people we meet in Palestine. So there's so much that we can't really see that's going on. But what I don't like about it is, just as it looks like the world is reorienting politically, economically, away from this old imperial model of sectarian religious violence that's dominated every one of our conversations for 80, 90, 100 years now, suddenly we fall
Hmm.
back into it again in America, and the Brown University thing with the Allah Akbar, and then you get it over there.
Yeah.
So what I say is, thank God a Muslim fella came and stopped the original shooting. He shouldn't have stopped shooting. He
Yeah.
should have killed the guy, as a lot of people have observed, right? When you have your enemy in these
Hmm.
situations, you finish it. But just look, I mean, the
Yeah.
picking up guns, did you see them? There's a new gun. Oh, where did I get this gun from? What's going on here?
Crazy.
So I think let's have a deep, like, where have we learned anything about these killers? Have we learned anything about where they got the firearms? I say
Yeah.
look into that before we start looking at speech laws right away. It's the same old battle plan, and it doesn't work. You're having the same problems in
Right.
Europe, and they got all the laws you can imagine, and it still happens. So, Australia, I think we got to look deeper into it because it looks very convenient, and the timing stinks, and who knows what else
Hmm.
is going on under the hood. So it's just one of those instances where we have no trust left in the media, we have no trust left in institutions, and because of that, you get all these conspiracy theories that start sprouting up everywhere, and there's no way to understand what's real and what's not. All you hear from the institutions is more censorship, and we know it doesn't work. We know. It's
Hmm.
clear.
Yeah. And now they're talking about the Australian government, that is, about the idea, there's this idea of targeting speech that is quote unquote dehumanizing, but not
Mm.
yet violent. And it sounds simple, okay, but historically, how messy does that get once laws meet real world enforcement, especially when it sounds like these types of measures don't even do much?
Yeah, it always goes in the same direction. When I worked for the previous prime minister in Canada before Trudeau, we had and Canada is very much a judicially run country. The judicial branch is very powerful in Canada, and the charter, the Canadian Charter of Rights and Freedoms, empowers the Canadian judiciary even more. And so one of the things that we did is, there was a line in the human rights laws in Canada that was likely to, it said likely speech that was likely to incite violence. And just because they put the word likely in there, it turned into a business. You could take any word
Oh,
that a real person, yeah, it turned into a real business, people suing because it's a separate court, and it comes with financial penalties, and it became a business. And you saw people, for example, there was a show called Little Mosque on the Prairie, and it was, a pretty good show actually by Canadian standards. It was a sitcom, and a fella gave it a bad review, and he actually got summoned to this court and was fined hundreds of thousands of dollars because he gave a bad review to the show. Now, the show wasn't that good, but it definitely deserved a bit of criticism. It was a clever idea, and they missed out on some of the hijinks and comedy that you'd like to see in a sitcom. It was kind of like a Roseanne,
hmm.
but set, in a Muslim family. It had a
Yeah.
few moments, people liked it, but again, it got to the
Yeah.
level where just a bad review. And the guy wasn't against it. He said, this could be a little funnier, sorry. And he was dragged before this court. So we got rid of it because they turned the incentives around to make a business out of this. You had people just fishing for these kinds of cases because there was financial remuneration. So what we found was, when we got rid of that, it brought it back to reality. And it was, if speech does incite violence, then it was still a human rights concern. But the likely to, that subjective clause, just like this subjective clause here in this law, opens it up too much and probably turns on a business opportunity, which is the last thing you want. You don't want people making money off of this kind of stuff. You want it to be used just in the most egregious cases. So I'd say this
Hmm.
is along those lines where the lawyers are going to say it's great because they get a lot of money out of this. This is a whole business line that opens up to them. And so you're going to see a lot
Hmm.
of people say it's, but it's an incentive thing. And of course, when you start getting into this subjective language, it just opens it up to exploitation. So it's a very bad idea.
Yeah, no, absolutely sounds like that. And speaking of ideas, this next one could be good or bad depending on how your point of view on it. So let's get to our next story here, Nolan. As this next tale is unfolding in Hollywood and Silicon Valley, as after nearly 50 years on broadcast television, the Oscars are finally and officially leaving ABC and moving to YouTube starting in 2029. The Academy announced a multi-year deal, making YouTube the exclusive global home of the Oscars through at least 2033. The deal moves the entire Oscars ecosystem online, including red carpet coverage, behind-the-scenes content, nominations, announcements, the Governor's Awards, student awards, filmmaker interviews, podcast, and film education programming. Now, for the Academy, the logic is increasingly unavoidable. Linear television ratings have declined sharply. Global reach now outweighs domestic prestige, and streaming platforms offer scale that traditional broadcasters no longer can. For YouTube, landing the world's most recognizable award show is a declaration of intent. The platform is no longer positioning itself as an alternative to television. It is positioning itself as the main stage. Now, why this should matter to our audience at home is pretty simple. When the Oscars abandon broadcast television, it signals that cultural authority is no longer anchored to cable networks, but to platforms that control global distribution, attention, and participation. So this Oscars move, though, is not happening in a vacuum. Let me break this down for you. At the same time, Warner Brothers Discovery has formally rejected a hostile takeover bid from Paramount, urging shareholders to back its existing deal to sell major studio and streaming assets to Netflix instead. Warner's board argued that Paramount's offer carried higher financial risk and uncertain funding, while Netflix's deal offered clearer value and fewer regulatory complications. Paramount disputes that characterization and is pressing shareholders directly, setting up a prolonged battle over the future of one of Hollywood's largest content libraries. Taken together, these moves point to the same reality. Legacy media companies are choosing global streaming giants over traditional rivals. Bringing Nolan back. Nolan, now that the show is moving entirely to YouTube in 2029, do you see this as the official end of broadcast TV as a cultural gatekeeper, or has that power already shifted somewhere else? This is a big move, Oscars to YouTube. What are your thoughts?
Yeah, I think your characterization of it is correct in the sense that, they're sensing their cultural relevancy is going down. I remember when Oscars were must watch, and, I remember everyone, I'm going to watch all
Yeah.
the nominated best films and I'm going to root for the one. That all went away. They got political. Of course, it's another one of these things that Trump sort of infected and turned into a cultural reckoning, and it turned into anti-Trump stuff at the Oscars. And so it turned a lot of people off,
Hmm.
of course. And so I
Yeah.
think, the famous Ricky Gervais speech at the Golden Globes, the sort of lead up into the Oscars, which was, I think, a real
Yeah.
touchstone for the kind of change we're experiencing because, we're getting to the point now where no one has seen the five films that get nominated for Best Film. It's been
No.
years since I've seen the one
There's
nominated.
10 now.
There's 10, yeah. So, and then I saw, I did see Tom Cruise win the Lifetime Achievement Oscar just a few weeks ago. And the speech he gave
Yeah.
reminded you of what the Oscars really could be. And, this is someone shunned by the
Hmm.
Oscars for a long time, but he really is the greatest movie star left in the world. And,
Yeah.
you gotta love Tom Cruise. And so Tom Cruise went and gave one of the most beautiful speeches about filmmaking, about the art of Hollywood. And no one will ever deny this is a real artist. This is someone who really does create beautiful things. Of course, there's physical art
Hmm.
involved. I never understood why it wasn't valued by the Academy. So what you want to see is the Academy really change their aesthetic, really change the way they look at the world. It's not supposed to be some prestige ivory tower. Filmmakers are people who get
Hmm.
their hands dirty. You hear right now in LA, people in LA talk about it like they're on the last chopper at a nom, right? It is existentially
Yeah.
difficult for a lot of people in that industry to see a future. And I've heard anyway that Mark Wahlberg's attempt to build a Hollywood competitor in Las Vegas is getting steam. I know
Mm-hmm.
Trump is very interested in funding it, right? Trump has this 2025, or sorry, 2026 America 250th project of freedom cities. He said cities out of the desert. I
Mm-hmm.
guarantee Mark Wahlberg is getting one of those Freedom City studio situations because that's,
Yeah.
he's in line with Trump and Trump's going to lean in on the Hollywood thing. So I think, putting Trump aside, if Hollywood does embrace the actual operators in Hollywood, if it does embrace the Tom Cruises, the Mark Wahlbergs, the producers who get stuff done, and not the sort of prestige films that I've never seen, heard of, don't know about, don't care about.
Yeah.
The one last year with the gangster that was trans, and you're supposed to cheer her on, but she's actually a
Mm.
murderer. I forget what it was called, but it was absolutely insane
Yeah.
when you read the framing of it,
Yeah.
and it's like she had to get you to be on her side. She was a murderer who abandoned her family, and you can't turn her
Yeah.
into a but they tried to. So
They did.
there's an aesthetic gap between what Americans and what people in the world want as entertainment. I think we all want to celebrate Hollywood. I lament that I can't take my
Mm.
kids to movies, that there's not a lot out there, that there's like, I look at the thing and I
Yeah.
say, that's a movie. And then it's like, well, we went to Superman. That they loved Barbie. We had a great time at Barbie. That was a great movie, but that was two
Yeah.
years
That
ago.
was good.
Yeah.
Yeah.
We may see Wicked
Yeah.
over the holidays. They liked Wicked 1. So we might go see that. But there's just not a lot. And it used to be there was a guaranteed Thanksgiving movie for kids. I mean, remember when Harry Potter used to
Right.
come? The best, like you couldn't
Toy
wait.
Story 1 came
Toy
out
Story,
during the
now we got Toy
Thanksgiving in
Story
like
5.
94.
5? Are we at
Yeah.
5?
They're all great, though. I'll take as many Toy Stories as they're willing to make.
We're
They're all
looking
excellent.
forward to the new one. We're looking forward to the new one. My kids did like. There were the few of the
Yeah.
Disney films from that generation that they liked.
Yeah, yeah. I mean, the prestige of the Oscars of old just doesn't kind of match up with the world we're in today. So I'm actually excited for the YouTube takeover. I think it's going to provide us hopefully with a different angle that we haven't seen from the Oscars that's more befitting of the world we live in now. But we'll see how it is. It's certainly a very different system than it was 20 and especially 30 years ago. The Oscars used to be can't miss television. And like you said, I don't even know. There's 10 movies. I probably haven't seen any of them this year.
Blippi
So
on the red carpet.
different
Blippi,
space.
Blippi on the red carpet.
Yeah. Yeah. All right, we got to take a quick break here, Noah. But when we're back, we're going to be talking about Bitcoin and Coinbase adding their own prediction markets. A lot more underway on today's episode of Roxom TV. Stay tuned. We'll be back right after this. All right, guys, welcome back to Roxom TV News. Currently, Bitcoin is sitting back above the 88K mark, so it looks like things might be shifting in the right direction. But right now, I want to shift to the United States tech finance front, where the story that we're about to talk about is happening inside the Coinbase ecosystem and across retail trading apps nationwide. You see, Coinbase is expanding beyond crypto trading into stock trading and prediction markets, and that is a direct shot across Robinhood's bow. Now, the company says that U.S. users will be able to trade stocks in the Coinbase app using USDC, and Coinbase will also offer thousands of prediction market contracts through Kalshi. In plain English, Coinbase is trying to become the everything app for trading, where your crypto, your stocks, and your will this happen bets all live under one single roof. Now, this move expands Coinbase's potential market beyond the boom and bust volatility of pure crypto volume. It also drags Coinbase into more direct competition with Robinhood, which has been moving aggressively into prediction markets. Gemini also recently said it is entering prediction markets because nothing says new financial frontier quite like everyone running to the same doorway at the same time. There is also an industry politics layer here as well. Kalshi and Crypto.com announced a coalition for prediction markets that includes Coinbase, Robinhood, and others, with the stated goal of preserving federally supervised access and resisting state-level crackdowns. So the future fight is not only product versus product, it is also who regulates these markets and whether states or federal frameworks set the rules. Meanwhile, Cathie Wood's ARK Invest bought more shares of Coinbase while selling DraftKings and also buying shares of Peter Thiel's Bullish. For viewers at home, this all matters because the line between investing, trading, and gambling is getting thinner, and the apps are getting designed that way for that specific purpose. Now, if Coinbase pulls this off, your crypto app becomes your everything trading app, and that changes how millions of people interact with markets, risk, and regulation going into 2026. All right, joining us again to talk about this story, we have Nolan Bowerly. Nolan, Coinbase is expanding beyond crypto into stock trading and prediction markets, essentially trying to become a single app for investing, speculation, and forecasting outcomes. Is this smart diversification in response to shrinking crypto volumes, or a sign that the original crypto-only model just isn't enough anymore? What do you think?
Yeah, I think it's just a reiteration and a rehashing of the old crypto model. The prediction markets were one of the original use cases of the whole crypto thing from the very beginning in Bitcoin anyway. I remember if you go back to 2015, 2016, Bitcoiners were heavily involved in the election prediction markets then. And by the way, when I heard you describe the coalition to keep regulators out of or from stopping the prediction markets, don't forget that it was one of the weirdest things that happened around the SBF scandal is that SBF's brand name, the knowledge of SBF and FTX come from them running the only 2020 prediction market. And in the days that followed the Trump-Biden election, not a lot of people realized, but SBF was Biden's largest donor simultaneous to owning the market. And that's where the FTX brand ended up becoming splashed into American consciousness. It was used in the days after the election to say, hey, look, the bettors, the gamblers don't believe Trump won, the gamblers believe Biden won. And so this was used for cognitive closure around the 2020 election. But here's where the corruption becomes apparent. When SBF starts making all these political donations in 2022, in January 2022, he basically controlled the entire 5-person board of the CFTC. And one of the first actions they took was to stop prediction markets in America at the very moment that SBF had some kind of tacit control over them. And so a lot of people, that was an alarm. Yeah, that was one of the original alarm bells about SBF and what he was up to. Because first of all, why would he be using influence to shut a market down? He was going to be the only one that was allowed to participate after. He was going to shut down American onshore, but he was operating out of the Bahamas, don't forget. So he was going to be able to take the entire polymath polymarket or the polymarket. Yeah. He was going to take the whole polymarket thing. Yeah. So the prediction markets have been in the industry for a long time, but they're just more crypto. So Jack Mallers even responded to this today. And I think his response says it all. He said different starting points. He's talking about Robinhood and Coinbase. He says different starting points, same destination. Coinbase, Robinhood, sports betting, prediction markets. When currency is debased, everyone is a speculator. Hard work isn't enough. You have to predict weather. I won't build that for the world of my kids. Future needs Bitcoin. And I'd say that's where a lot of people are. It's gambling. It's more of the casino stuff. It's no different.
Yeah, we got to wrap up on this segment here, Nolan. But before I let you go, in light of prediction markets, in your view, what percentage would you give these prediction markets in terms of their ability to actually add value by aggregating collective intelligence? If you had to go 0 to 100, what do you think? And then we're going to wrap up.
Well, I'm going to say value. Value for a simple reason. I don't know about getting the right answer. What they are showing is insider influence. They're showing when the market changes and there's a seep of secret information, the market suddenly spins. And so they're actually being used to root corruption in a lot of ways. That's where I think the value add is right now.
All right, I appreciate it. Wisdom of the crowd. We'll see how it plays out. Nolan, it's always a pleasure having you on the show today. Thank you so much for joining us and sharing your insights and expertise. And we'll see you, I guess, after the holidays, right?
It's true. Yeah, you will see me after the holidays. So have a Merry Christmas and a Happy New Year, Hank.
You as well. Happy holidays to you and yours, and thanks for joining.
Thanks. I'll be back in the Southern studio on the 5th, on Monday, the 5th of January. So we'll probably meet up on the 6th.
All right, sounds good. Happy New Year's to you and yours, and enjoy the rest of your week and weekend, my friend. Thanks for stopping in. All right, we're taking a quick break here at RoxomTV News, but when we're back, we're going to be joined by our second special guest of the day to break down more of today's top stories. So stay tuned. More RoxomTV News underway right after this. Great, thank you. Wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, Hank, what makes a Ledden loan different? You see, with custody loans, your collateral, it stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours, no monthly payments. You can repay anytime with zero penalties. And for transparency that, grown-ups actually want, proof of reserves reports every 6 months, verified by a top accounting firm. The bottom line here is Ledden lets Bitcoin holders unlock liquidity without selling. And you can check them out at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. Welcome back. Here's a quick recap of the top stories we had during the first hour of RoxomTV News this morning. In Washington last night, President Donald Trump delivered a rare 20-minute primetime address framed as a national update, but focused largely on reshaping public perception of his presidency amid growing anxiety over the economy. Trump leaned heavily on blaming former President Joe Biden for current affordability pressures, insisted that prices are coming down fast, promoted tariffs as the engine of economic recovery, and unveiled a proposed $1,776 warrior dividend for service members, all while offering few concrete policy details. The speech quickly ran into credibility issues, with fact-checkers flagging exaggerated or false claims on inflation, gas prices, drug costs, investment figures, and employment, and analysts noting the rushed, uneven delivery did little to reassure voters already skeptical of the administration's economic messaging. And in other news, shifting to the Western Pacific, the United States announced a massive arms sale to Taiwan valued at more than $10 billion, including advanced missile systems, artillery, drones, and military software, a move Washington says supports Taiwan's self-defense and regional stability. Taiwan welcomed the deal, but China responded sharply, condemning it as a violation of its sovereignty and accusing the United States of interfering in internal affairs and escalating tensions across the Taiwan Strait. The announcement highlights the fragile balance around Taiwan, where U.S. legal obligations, Beijing's reunification threats, and rising defense spending converge, making this a flashpoint with real consequences for global markets, supply chains, and geopolitical stability. In Australia, Prime Minister Anthony Albanese announced plans to draft tougher hate speech and anti-radicalization laws following the deadly anti-Semitic shooting at a Hanukkah celebration in Bondi Beach that killed 15 people, including a child. The proposed measures would increase penalties for hate speech, expand powers to ban extremist organizations, and give the government greater authority to deny visas to individuals deemed likely to spread hatred or incite violence. The move reflects a broader challenge facing democracies worldwide: how to prevent rhetoric that fuels real-world violence while preserving free expression, with Australia now preparing to redraw that legal line in response to one of the worst attacks in its modern history. All right, moving on to our next story, our top story of the second half, is here in the United States. Shoppers are feeling the consequences as inflation came in cooler than expected, and Wall Street immediately started acting like it saw sunshine through a storm cloud. The Consumer Price Index rose at 2.7% annual rate in November, according to a delayed Bureau of Labor Statistics report. Now, economists polled by Dow Jones expected 3.1%, so this landed as a meaningful downside surprise. Core CPI data, which strips out food and energy, increased 2.6% over 12 months versus expectations of 3%. That is the good news. Here's the wrinkle. This was the first CPI report covering the period of the U.S. government shutdown, and the shutdown disrupted data collection. October's CPI was canceled entirely, and the BLS said it could not retroactively collect October data, so it used some non-survey sources to calculate the index. So investors are excited, while economists are basically saying, yes, but let's not get emotionally attached just yet. Markets still, however, moved quickly. Stock futures jumped, Treasury yields slipped, and traders bumped up the odds of a March rate cut, with the FedWatch tool showing around a 60% probability. The Fed recently cut its benchmark rate by 25 basis points for the third straight meeting, and this report fuels hopes that easing could continue if inflation stays contained. But the future hinge here is simple. The next clean data prints, without shutdown distortions, will decide whether this was a turning point or a statistical mirage. For viewers at home, this matters because rate cuts can eventually touch your mortgage rates, your car loans, and your credit card interest, even if it takes time to show up in your actual monthly life. Inflation is genuinely cooling. The next chapter is about whether wages and affordability finally feel less brutal, not whether a spreadsheet says mission accomplished. All right, joining us now to talk about this story and others, we have a returning guest of the show, Brian Hoonjung Pak, CEO of SmashFi. Brian is back with us on the show today to break down this story and a few others shaping the markets, crypto, and tech. Brian, welcome back to RoxomTV News. Great to have you back on the show. How are you? I'm not hearing Brian yet, guys. We get some audio here. One sec, Brian. I'm not hearing you. There, I can hear you now. How are you, Brian? Thank you for joining us this morning.
Thanks for having me again. It's always good to see you.
Yes, the pleasure is all ours. We're excited to have you back to talk about this story and others this morning. So let's get right back into it, Brian. The headline here says that inflation cooled more than people expected, but this report was compiled during a government shutdown with incomplete data. When you look at the CPI prints like this, how much weight do you actually give them versus longer term trends like money supply, debt growth, and real purchasing power?
Well, you always have to look at the CPI and you have to look at CPI and the long-term treasury rate at the same time. The 10-year
Right.
treasury yield is not coming back to its original figure. So the CPI, even though CPI has come down a little bit, people are still expecting the CPI or the inflation in general will remain hot in the next year. So if the 10-year treasury yield doesn't come down below 4% level, then we can expect the market is still expecting the inflation will be a kind of an issue next year. So it's a little bit early for us to, okay, we have finally crashed down the inflation issue and the Fed will lower down the interest rate dramatically next year, things like that. So why does CPI read doesn't really the Fed will not count the CPI read as important as the other issues like labor market issue. The Fed already announced last October, this October actually, a few months ago, in a town hall meeting, the Fed Chair Jerome Powell said the Fed will not really take the inflation as important as the labor market issue. They will focus on what's going on in the labor market rather than considering inflation as too much of a stress, because it means they admitted the inflation is they have to let the inflation run away, which means it's financially suppressing the people of the United States. It means the Fed has to let the inflation stay at the 3% level. Of course, their target is still 2%, but they are not pushing the inflation back to 2% level like really hard because the government on the other hand, has wants the inflation to remain in this level for a longer time, because they have to keep issuing new bonds in a short term, in a short term maturity. And if the inflation stays above 3% or at the same level, at the current level, then they can effectively maintain current GDP to debt to GDP ratio, which is about 120% right now. So it's a really difficult game that Fed is playing right now. The inflation has to stay above 3%, and they also have to prevent the economy to cool down. And they also have to look at the labor market to not to go too much of a stress. So they're playing the 4D chess game right now, but I always believe that will fail eventually. It's a too difficult game for them to play. So I'm not really expecting them
Yeah.
to do a perfect do maintain the economy in a perfect condition. So let's see.
Yeah, let's see is right. I mean, right after this CPI report was released, markets immediately started pricing in a higher chance of a rate cut. So, Brian, from your perspective, does that reaction feel premature given the data issues we saw in the last couple of months, or does it show how desperate markets are for any signal that the tightening cycle is truly over? What's the gauge you're getting on this?
As a Bitcoin investor by myself, I'm seeing a lot of reactions that people are expecting the Fed and the Treasury Department of the U.S. government both start releasing new capital into the market as soon as possible. So they want the Fed to lower down the interest rate more dramatically, and they want the Fed to close down the QT immediately and start QE. So what the Fed had announced from the last FOMC meeting was the Reserve Management Program, which is called also RMP. It's another name for QE. So there's a strict difference between QE and RMP. Their mechanics are the same. The mechanism is the same. The Fed is injecting the new currency into the market. But for RMP, they are purchasing the short-term duration bonds issued by the Treasury Department. And QE, the Fed is purchasing the long-term duration Treasury notes issued by the U.S. Treasury. So when the Fed is doing QE, the purpose is very crystal clear. They are boosting up the economy. They somehow evaluated the economy is trending down, and the potential economic collapses coming on. So they are injecting the new currency to the market so they can boost up the asset prices and they can boost up the economy. They want the banks to issue the loans more dramatically than the past. But RMP is different story. According to the Fed, they are doing this to lower down the short-term rate that the banks lend money to each other. And they think the reserve level of the banking system in the US is below the ample reserve. So they don't know how much money the banks exactly need, but the Fed feels there's not enough money in the banking system. So they're injecting money to stabilize that area. But eventually they are doing the same thing, injecting the new capital into the market. And what Scott Bessent, what he announced a few days ago, matches with what Fed Chair Jerome Powell announced the RMP a few days ago. So the Treasury Department will loosen up the regulation in the banking system so the banks in the US can more easily issue the loans to the general public. So these two things coinciding at the same time hints me that, okay, they are injecting money to the market so the economy can boom up more dramatically next year, because the government will need the the asset markets to boom up because the election is coming up.
Right.
Trump administration needs this for the next election and the next presidential election coming in a few years too. So I think we're heading to a good year compared to this year. Of course, at the beginning
Yeah.
of this year, everybody expected, okay, this is going to be a better year than last year. The Fed will lower down the
Right.
interest rate more dramatically, but it didn't happen.
Yeah.
But I think the odds is higher for next year. So eventually the QT will become QE, and the
Hmm.
Treasury Department will issue more bonds in the name of boosting up the economy, and the asset price will answer to these factors. And the Bitcoin, which was suppressed quite a lot throughout the year compared to other asset classes, will be the one who is going to shoot up more than other asset classes.
Yeah. No, I think you're right, Brian. He makes some really good points, and I think that can be seen. Trump, presidencies are always tied to how the economy is doing. That's his own measure of how he's doing as a president. And after seeing last night's what could be perceived as kind of I thought it was a little defensive of a address to the union, kind of justifying why things aren't great right now. It would not surprise me for them to start pumping more money into the system in order to lift at least what appears to be the entire economy right now, because that would speak a lot better to Trump's turn than kind of a lot of the rhetoric going around right now. We're going to move on to our next story, Brian, but we're staying here in the United States as this next one is unfolding at the intersection of politics, markets, and very futuristic energy dreams. You see, Trump Media and Technology Group, the company behind Truth Social, just announced a surprise all-stock merger with fusion power startup Tide Technologies, valuing the combined deal at more than $6 billion. And Wall Street, they love the headline. Trump Media stock, which trades under the ticker DJT, surged roughly 25% in pre-market trading, even though the stock is still down more than 75% from its highs earlier this year. The deal, expected to close in mid-2026, would give shareholders of Trump Media and Tide roughly equal ownership of the combined company. It's complicated, and it would create what companies are calling one of the world's first publicly traded fusion energy firms. That's a big claim, considering there are currently 0 commercial fusion plants producing electricity anywhere on Earth. Here's the strategic pivot, though. Trump Media, which began as a social media company, is now positioning itself as a holding company spanning social media, streaming financial services, and now experimental energy. Now, under the agreement, Trump Media would provide up to $200 million in cash at signing, with another $100 million potentially unlocked once regulatory filings are submitted. The combined company would be led by Trump Media chairman Devin Nunes and Tide CEO Dr. Mishi Binderbauer as co-CEOs. Now, Tide brings serious scientific credentials to the table here. The company says it holds more than 1,600 patents and has raised over $1.3 billion from heavyweight investors, including Google, Chevron, and Goldman Sachs. Its long-term goal is to build what it calls the world's first utility-scale fusion power plant, pending regulatory approval. Fusion is often described as the holy grail of clean energy: abundant power, no carbon emissions, and none of the meltdown risks associated with traditional nuclear plants. The catch, though, is the timing. Fusion has been about 10 years away for decades now. For viewers at home, this matters because it shows how politics, capital markets, and the race for AI-driven energy dominance are colliding. Now, if this works, it reshapes how energy technology and influence are financed. If it doesn't, well, it becomes another reminder that the markets love bold narratives even when the technology hasn't quite caught up yet. Bringing Brian back. Brian, this deal merges a social media company tied to politics with a fusion energy startup that has no commercial product yet. From your vantage point, does this feel like a genuine long-term energy bet or more like a narrative-driven market move designed to excite investors? What do you think?
This news reminds me of the recent interview between Elon Musk and Nikhil Kamath. I've seen the entire interview, which was 2 hours long, and Elon says something interesting about the future currency. He said in the interview, the energy will be the currency because in the world where the AI is so abundant, everyone will have their own AI agent, and the the product and service and goods price will be lower, a lot lower than the current level. So people will
Yeah.
live in abundance, and the concept of money will be diminishing in that kind of world because
Right.
everything is so abundant. So we don't have to exchange goods and services in the currency. But even in the world like that, some form of money will be there. We'll have to
Yeah.
providing valuable service to the people. So what's what will be the only scarce thing in the world like that? Of course, energy. Government cannot
Right.
legislate energy into money. They have to dig in from the ground or create out of solar power, nuclear power, or wind power, something like that. And he says something interesting about people will eventually use how to solar energy into abundant energy. So he didn't mention the word fusion technology, but I think he mentioned that. So what fusion technology does is where the humans will build factories that pretty much does what sun is doing on the surface of the earth. So where it's similar to nuclear power, but we don't create any nuclear waste or carbon emission,
Right.
things like that. But we're still making tons of electricity like sustainably, right? Continuously. So if this becomes possible, then energy will be abundant also, just like AI makes everything abundant. Then what's going to be scarce will be used as money. Everything will be abundant,
Right.
but money has to be scarce. So things like gold and Bitcoin, which has a very nice scarcity feature, will be used as a currency in that future. So I think Trump, although any news related to this doesn't really mention anything about Bitcoin as used as a currency, but I think Trump has seen this future and he's already investing in it. He also sees the conflict between the US and China around the AI arms race will be more competitive in the coming years. So AI, in order to compete against China's AI power, the US needs a lot of electricity, right? So
Right.
of course, they have to invest in these facilities and new technology to create more electricity. So Trump is getting ahead and investing in this industry. That's what I see.
Yeah, absolutely. Yeah, no, totally. I mean, in this world of AI we're seeing and Bitcoin, we know requires a lot of energy to produce and mine Bitcoin. It's seeming like energy is the new scarce asset that kind of is like, I mean, Bitcoin is energy money, right? So it really does, if you're reading between the lines, position Bitcoin in a favorable light as the world continues to churn in the way that it's going. And what's particularly interesting I found about this story, Brian, was that Trump media is repositioning itself as kind of a holding company that's spanning across media and finance and now experimental energy. So my question to you is, do you see this as part of a broader trend where companies are chasing future shaping narratives to stay relevant, especially in markets driven by speculation and attention? Because from social media company to experimental energy company, that's quite the leap. What do you make of that? Is this something we're going to be seeing from companies more often down the line?
Yeah, exactly. This news reminds me of another news that's really hitting the mainstream media these days in Korea. There's a company called Korea Industry Company in Korean name, and it's listed in the Korean stock market. And Trump just announced the U.S. government will take a per portion of shares of of this company because it's related to the rare earth producing. So it's these two news connected to each other. So Trump Media Company was originally SNS, a social media platform, but it's related to the family business that Trump family is doing. But what Trump company and Trump media company and the Trump family heavily invest in right now is the cryptocurrency, which is in their own language, the future of the finance. So they are investing heavily into the future, and Trump administration and the Trump family are the arms that are reshaping the future of the U.S. So the trend is already here. The U.S. government and the Chinese government have to compete each other for a very long time in many areas, and AI is one of them. And rare earth, of course, the U.S. needs rare earth, so that's why they are purchasing this small company in Korea. And U.S. government has announced they're purchasing some shares of Intel and these semiconductor producing companies because they are considered as a very important weapon to compete against China. And Trump administration is doing everything to win over the Chinese government in these areas. The future, to win the future, AI, military, humanoid robotics, AMM, these things, it's something that the U.S. government doesn't really have superiority on the Chinese government, because China focused on improving their manufacturing ability for the last decades. But the weapon that the U.S. government has right now is the soft power. AI is, of course, their best weapon, and these M7 companies in the US are the best in terms of creating the best AI algorithm in the world. But in order to create these AI algorithms and maintain the system, they need the manufacturing ability, which they don't have. So they're purchasing this company from Korea and Japan, Australia, and these other countries. So Trump Media Company transitioning its main business to fusion power is a side effect of this trend. So it will happen more often as time goes by. Because the US, it has the soft power, but it lacks the hard power. And the hard power is what China is more superior over the US. So Trump will do everything for the hard power to come back to the US. It's also called reshoring, right? Manufacturing factories, they want, the Trump administration wants these manufacturing factories to come back to the US soil and hire people here. So in order to do that, the administration will do anything. Trump Media Company merger with fusion technology company is one of them. One of the many examples they can do. Acquiring a Korean rare earth company is another example. These things will just happen more often in the coming days.
Yeah, absolutely. I mean, it's becoming very clear between AI and cryptocurrencies, specifically, Bitcoin. Whoever controls the power going forward will be the power of the world. And this next story we're talking about is one of the companies that's helping pave that way. And of course, I'm mentioning Tesla here. And their signature electronic doors are facing some growing scrutiny from regulators, consumers, and even longtime fans. You see, in May, Aaron Geeter's toddler son became trapped inside her Tesla Model Y after the vehicle's low voltage battery failed, disabling the electronic door system. Now, the emergency glass breaker she had bought was locked inside the car. After frantic calls to family, Tesla support, and eventually 911, first responders attempted to break the windows until one of the doors suddenly opened on its own. Weeks later, Geeter traded in her Tesla for a Honda CR-V, and her experience isn't exactly isolated. A Bloomberg investigation found more than 140 consumer complaints filed with the U.S. auto safety regulator since 2018 involving Tesla doors that failed to open, especially after crashes or power loss. The National Highway Traffic Safety Administration has now opened a safety probe into whether certain Tesla Model Y doors are in fact defective. Tesla pioneered flush, electronically controlled door handles that became a symbolic of sleek, futuristic car design, but when the low-voltage battery fails, those doors can stop functioning entirely. Manual emergency releases do exist, but they vary by model and are often hidden unmarked or only accessible from certain seats. As awareness spreads, Tesla owners are adapting in ways that sound more like survival training than car ownership. Drivers are buying glass breakers, adding brightly colored pull cords, and filming TikTok safety briefings to show passengers how to escape. Nearly 35,000 people have signed a Consumer Reports petition calling for clearer standards and better design. This matters beyond Tesla owners. Tesla does make up a large share of rideshare and rental fleets, meaning that passengers often have no idea how to exit the vehicle in an emergency. Current U.S. safety rules don't require for a manual backup for electronic doors, but regulators say failing to provide a clear exit could constitute a safety defect. For viewers at home, this story matters because it highlights a growing tension in modern technology. When design prioritizes aesthetics and automation, failure modes matter just as much as innovation. And when systems fail, clarity and simplicity can mean the difference between inconvenience and real danger. We're bringing Brian back. Brian, Tesla helped redefine what a future car looks like, but this story shows how futuristic design can create new risks. When you look at this, is this a design failure, an education failure, or maybe a regulatory gap? Or is it maybe a combination of all three? What are you seeing?
First, I want to confess that I'm not a Tesla owner, so maybe I'm not the expert in this area. But this is really interesting. I want to tell you a story. When I was in college, it was about year 2008. The first iPhone 3G came out. I was using BlackBerry at that time. Everyone used BlackBerry at that time, or Motorola. These other feature phones were more widely used, but iPhone came out, which looked pretty much similar to this. The current iPhone 16 is my current smartphone. People had concerns. It didn't have any button on the screen. So what if the power goes off or the touch screen doesn't work? What happens? Well, everyone had that kind of concern. So I also had the concern too. So I kept using BlackBerry for another 2 years, but that's why I was, it turned out that I was slow in transition. Technology moves very fast. It improves very fast, and it changes everything without us noticing. I think Tesla, it looks like the future. Any model that Tesla launches looks like a future to me. And when we transition from the current, the present into the future, there is always hiccups. So I think this news looks like bad news for Tesla and its stock owners, but I think this is a good news. It's rather a good news because people are so desperately demanding Tesla cars, and even with this minor issue, they are willing to learn this way to get out of the car without the power remaining in the car, right? There are a lot of videos on TikTok that educate people how to get out of a car when there's no battery. These things, the other car manufacturers don't have this kind of trend. They are advertising heavily on TV, but they are rarely seen on the social media, which is the leading tool of the trend, right? So what youth is talking about on TikTok becomes a very huge phenomenon in the next 1 or 2 years. So TikTok is the trend leader, other social media platforms as well. But TikTok is the most powerful one. But when Tesla is talked among people that are heavily using TikTok these days, then Tesla is on the mainstream trend. And I think this is a good news for Tesla owners. And this is just a little bit, this is a very small hiccup when the future is coming to us. So this issue will be actually resolved, and Tesla will be just fine.
Yeah, similar to the those stainless steel trucks they have, Tesla has seemed to be a little bulletproof when it comes to outside noise, and they're really good about taking any kind of attention and turning it into a good thing. I remember during Doge, right? Tesla was getting killed. Everybody was anti-Elon. Right now, I believe the stock is at all-time highs only months later, so it's shown a lot of resilience. But what stands out to me here is that, to the point that you made, we have owners are turning to the TikToks, to the Instagram Reels, to Amazon accessories and to Reddit for safety solutions that don't seem to be provided by Tesla naturally, right? So my question is, though, despite all of this that we're seeing, and you could say that it's good news, Tesla will make those fixes in the future, but my question for you is, what does that say about consumer trust when users feel they have to crowdsource emergency fixes for what's ultimately a premium product?
Well, this is something that Tesla has to improve. If it doesn't provide any solution to the customers, and customers are finding their own way out, then it's of course the fault of the company. So I'm not saying Tesla is perfect or anything like that. It's just technology is moving very fast, and the customers are also very fast. They are not waiting for the company to give them the solution, but they are always actively looking for the best possible solution for them to live the perfect life they want. And in their eyes, they consider Tesla trucks and these vehicles as a very good solution for them, because it's FSD feature and electricity run vehicle, things like that is a very good service for them. But there's just too many things the company doesn't provide for them, because Tesla is a newborn company compared to other car manufacturers, which is like 100 years of old, and they are lack of this ability. So I think this is something that Tesla has to improve in the coming future, in the coming days. And well, there's a pros and cons. We choose the technology, then we sometimes have to deal with this kind of problem. But if this is something that we can think it's okay, we can just pass by, then it's okay. Tesla will also grow and become a more matured car manufacturing company in the near future, I guess.
Yeah, you got to imagine the consumer noise we're seeing as a result of this will eventually get to Tesla, and they'll probably fix it. But as the old saying goes, we all choose the amount of suffering we're willing to endure in life. And for Tesla, this might not be much for them. So they might ignore it for a while, or it might get so bad where they have to make those changes. I guess only time and Elon will tell. All right, Brian, we're going to take a quick break here. But when we come back, you and I are going to be going over our top Bitcoin stories of the day, including plans for a new city funded by Bitcoin. Excited to talk about that and more with Brian as we return after this quick break. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, welcome back to RoxomTV News. Bitcoin is currently trading above the 88K mark this morning. And one of our top Bitcoin stories of the day, I want to talk again about Coinbase announcing their plans to add stock trading and large-scale prediction markets to its app, putting it in more direct competition with Robinhood and other retail trading platforms. The move broadens Coinbase's business beyond volatile crypto trading volumes, but also pulls it into a crowded and increasingly controversial space, as rivals like Robinhood, Gemini, and Crypto.com race into prediction markets at the very same time. Now, behind the product push is a regulatory battle, with platforms lobbying for federal oversight to avoid state-by-state crackdowns, which could determine whether these markets scale or stall. We're bringing Brian back. Brian, Coinbase is trying to put crypto, stocks, and prediction markets all into one app. From your perspective, is this a smart way to simplify finance for users, or does it risk confusing people about the difference between investing and gambling? What do you think?
I'm not a huge fan of prediction market. It's just a gambling in another way. So we don't go to we don't go to Las Vegas casino every day, right? But Coinbase is launching this prediction market into its app, is pretty much providing the same thing to the people. I used to work for the crypto exchange in Korea too, and Coinbase is pretty much doing what every other crypto exchanges are trying to do. They want to expand their market into any investable assets possible. So crypto exchanges in Korea, they first dealt with hundreds and thousands different kinds of altcoins. They're promoting these altcoins, and they want people to come in and trade more often. And Coinbase has been doing pretty much the same thing for the couple of last years. And they are now expanding this same strategy into prediction market and stock trading market as well. This doesn't make an innovation. This doesn't make Bitcoin better in any sense. It's just doing the business to make more money and become an even bigger company. But at the same time, they are promoting this gambling market in the US. So I'm not seeing this as a really good news for the crypto investors in the US. I rather want companies like Strike or River to grow even more. So they are more like, they're focusing on Bitcoin, but they are not promoting Bitcoin as an investable asset. They are more like focused on Bitcoin in a way of accumulating wealth over a long period of time, right? So consider when you consider Bitcoin as a savings tool, then you don't really have to go to Coinbase and use these features like prediction market. You don't have to bet your life on it. You don't have to become a short-term investor and speculative trading trader. You have a higher odds to become successful when you save your assets into the hardest money on the earth, which is Bitcoin. So I rather want to say, okay, Coinbase, you're doing great. You're becoming a crypto mogul. You're becoming a more matured investing company. But I think they don't provide anything valuable to the society. They are not like providing innovation to the society. Then I think I don't want to believe their stock price to go up like forever. Market will eventually find out. This is it.
Yeah. It does kind of beg an interesting question for me, though, in regards to where we are in the market right now, because we are seeing Coinbase and Robinhood and Gemini and Crypto.com all rush into these prediction markets at what's about the same time. So my question is, Brian, does that tell you that there's a real user demand for this? Are people just foaming at the mouth to bet on everything? Or does it feel more like maybe the platforms are chasing engagement now that traditional trading and growth has slowed? What's your beat on this? Is this just, in fact, them trying to take every opportunity to make more money? Or is there really a user demand for this right now?
There is a user demand for the prediction market. Poly market, which is the largest prediction market at the current level, showed this is a really good opportunity for all these cryptocurrency exchanges and investing companies to put their feet on it. But the regulation was the problem, right? So regulation always comes later than the innovation. So the US government is now allowing these companies to launch their own prediction markets on top of their platforms. So I think they are late. The Coinbase, Robinhood, these companies are late against the poly market. But it's a guaranteed scenario, like just like the Bitcoin ETF. We knew Bitcoin ETF will be successful because we've seen it has been a dramatic success in the US market. So every other government in the world also want to issue their own Bitcoin ETF on their stock market. And some of the countries have done so, and they've seen dramatic capital inflow, like Hong Kong, Japan. Japan hasn't allowed yet, but anyways, Korean investment companies here in Korea is also expecting the government to give a green light to Bitcoin ETF because they've seen the US market, the success in the US market. It's just the same. So very simple. Everyone expecting that the prediction market is big and it's going to grow even bigger because people are so speculative these days. People want to make a good fortune out of their trading and investment, are almost automatically get interested in this prediction market, get involved in the prediction market, because there are so many things they want to predict and bet on it, like presidential election, Michael Saylor will sell its Bitcoin next year, things like that.
Yeah.
But this isn't a fortune for them. This doesn't make any wealth. This doesn't create any wealth. It's just a winner takes all situation, like going on 24 hours. So I guess it's an easy money, but difficult situation for them. Even more difficult situation for people to get even richer.
Yeah, I mean, I think the prediction markets are cool. There is something to be said for the wisdom of the crowd, but having it in these all-in-one apps like Coinbase, where you're actually trading real assets, it makes it such. To me, it feels like an on-ramp to degeneracy. It's like, oh, I traded some stocks and Bitcoin. Those are real things. Let's just bet on random things that the internet has hunches about. I just think about how easily my friends and I all slipped into the betting apps that you can have on your phone now. And this just seems like it's a kind of conflating real world investing in gambling in one, which I think is kind of a dangerous thing, but we're not going to stop it because they make money. So we'll see how that ends up playing out. We're going to move on to our next Bitcoin story here, Brian, because leaving the usual crypto hotspots behind, our next story is actually unfolding in the Himalayas, with Bhutan quietly making one of the boldest Bitcoin moves on the planet. You see, Bhutan says it will use 10,000 Bitcoin, worth roughly $885 million at current prices, to fund the development of a new special administrative region called Galefu Mindfulness City. Yes, it's real. And no, this is not a meme coin pitch deck. The Bhutanese government says the project will be a long-term economic hub in southern Bhutan, designed around mindfulness, sustainability, innovation, and modern financial connectivity, rather than flashy crypto branding. Importantly, Bhutan is not saying it plans to dump its Bitcoin to pay for the city. Instead, officials say they will explore options like collateralizing Bitcoin holdings, risk-managed yield strategies, treasury management tools, and long-term holding approaches meant to preserve the value of the reserve. That detail matters. You see, Bhutan has been quietly mining Bitcoin since 2019, revealed its BTC reserves publicly in 2024, and earlier this year said it would also hold other cryptocurrencies on its balance sheet. This immediately invites comparisons to El Salvador. Back in 2021, El Salvador made Bitcoin legal tender and announced plans for a tax-free Bitcoin city funded through Bitcoin-backed bonds. 4 years later, El Salvador still holds more than $650 million worth of Bitcoin, but its city project has moved slowly with few concrete updates. Bhutan appears to be taking a different approach. Urban planners following the project say Bitcoin is being used as a financial layer, not the identity of the city itself, which lowers political pressure and allows the project to unfold over years instead of chasing instant validation. Still, there are risks here. Experts warn that tying public development to a crypto-backed balance sheet exposes governments to price volatility, governance questions, and reputational blowback if the funding mechanism overshadows the mission. For viewers at home, this matters because Bhutan is showing how Bitcoin can function as a sovereign infrastructure, not just a speculative asset. If it works, it offers a real-world blueprint for how states can deploy Bitcoin strategically without turning governance into a hype cycle. But if it fails, it becomes a reminder that even sound money doesn't eliminate the hard work of execution. Bringing Brian back. Brian, Bhutan isn't saying it will sell its Bitcoin to pay for this city. Instead, it wants to use Bitcoin as financial backing. In plain terms, how does a government actually use Bitcoin this way without dumping it? And is that even realistic?
What we're witnessing here is the real world Wakanda is being born. So it's the second case after El Salvador. But I'm sure there will be more countries adopting Bitcoin like this, but Bhutan is quite unique because it has been mining Bitcoin with the clean energy they have on their soil for a very long time, and they now accumulated over 10,000 Bitcoin already. El Salvador didn't start this way. They started with this foundation that has donated Bitcoin into the local village in El Salvador, and the president has acknowledged this fact, and they adopted Bitcoin as a legal tender first, and then they are mining Bitcoin with their heat underground energy. But so it doesn't matter. The thing is that Bitcoin is transitioning energy into the real world currency, which has value. This is almost similar what Iceland is doing with the thermal energy they have. So Iceland is the largest exporter of the aluminum, and they are utilizing the thermal energy of their ground under the ground. They're transitioning in this heat energy into aluminum, and they export this, and they are making a good fortune every year. Their GDP, a very huge portion of their GDP is composed of the aluminum exports. So what matters is using the physical energy and transitioning it into what's valuable. And what Bhutan and El Salvador are doing right now is almost similar to what I said about Elon Musk and his interview with Nikhil Kamath. So energy will become the more important currency as time goes by, and we might see these countries become actually a very wealthy nations like Wakanda. So we all know the usage of Bitcoin right now. Bitcoin is just a store of energy, a store of value feature. It's currency. If we hold on to it, its value will go up, and the country or the government will become wealthier. That's okay. That's also very good bet on something futuristic. But we might see the actual use case of Bitcoin in the coming days, because Bhutan has announced that they will use Bitcoin as a collateral to issue these collateralized loans and actually earn yields out of it. So pretty much just like what Strike provides to its users, it's providing the collateralized Bitcoin loan service, right? And if Bhutan does something similar, then it might become a very large sovereign wealth funds that's doing a financial activity with its citizens, and it might be very useful for end consumers like us. If I hold on to my Bitcoin and I'm not willing to sell any of it, I might want to, get into this financial activity with Bhutan government. They can lend me some Bitcoin, or I can lend them some Bitcoin for yields, generating yields. These things will be very interesting. So I'm looking forward to it.
Yeah, it's really going to be interesting, to your point about like seeing how these countries that are kind of first movers in the Bitcoin space end up on the other side of this. Obviously, we have Bhutan in this story. You mentioned El Salvador. Bhutan, though, is specifically interesting because, like, as you mentioned, it's been mining and holding Bitcoin quietly since 2019 now, without turning it into a political spectacle, which we've kind of seen in El Salvador. So my question to you, Brian, is does that slower, low-key approach make this project more credible than other countries that made big Bitcoin announcements first and then figured out the details later? Do you see this as maybe operating as a similar to El Salvador, but maybe more successfully because of the way they've chosen to go about it?
Yeah, I think I prefer their approach over, like you said, making a big announcement first and then do nothing about it for a very long time,
Yeah.
and then slowly accumulate Bitcoin at the end, finally. This
Right.
kind of model can be easily found in the Bitcoin treasury companies too. These companies
Mhm.
usually announce they will be starting to accumulate Bitcoin, but at that moment they don't have any Bitcoin. But in after a few months, they will start accumulating Bitcoin. But when they actually do, the Bitcoin price like plummets and the bear market's coming, so they are slowing down the pace, and they finally, get acquired by another company, or they just don't do anything about it. So
Mhm.
countries adopt a similar model, then they also cannot really sustain very long time. But Bhutan is slowly accumulating Bitcoin using their own advantage. They have a lot of clean
Mhm.
energies like waterfalls and stuff, and they also have a sovereign wealth fund investing in Bitcoin ETF, and they are accumulating Bitcoin in these different ways, and then they are announcing the Mindful City. I mean, it has a fascinating name too, Mindful City.
Yeah.
I'm not
Yeah.
sure why the name is like this, but I personally do meditate by myself, and I always think mindfulness is really important concept. And the image of Bhutan, country as Bhutan, has it's the happiest country in the world, I guess. The Gini
Oh.
index is the highest or the lowest. I
Okay.
don't know. I'm
Yeah.
calculating, but it was once announced as the happiest country in the world. People are so even though they are not wealthy or anything like that, but they are
Mhm.
they are satisfying with their lives in general, I guess. So
Mhm.
I think the overall what they do is really smart and brilliant. The
Yeah.
Bhutan government, if they succeed to welcome the tourists into their country with building with this new mindful city, then we'll see another success case after El Salvador. It has become a very
Yeah.
large tourist spot to many people, even though they are not Bitcoiners. So I also want
Right.
to visit Bhutan one day. The happiest country in the
Yeah.
world, that's mining Bitcoin and hold on to this large chunk of Bitcoin and building this city on top of Bitcoin holding, then I also want to visit myself. So everyone thinks the same, I guess.
Yeah. Yeah, I mean, if the happiest country in the world is thinking Bitcoin is a good idea being used like this, that kind of speaks volumes, right? It'll be really interesting to see how countries like El Salvador and Bhutan, which one kind of emerges as the blueprint going forward for what's going to be the best way to kind of convert to this Bitcoin standard across the world. So those will be really exciting things. And we'll be watching those developments as they happen and hopefully having you back on to chat about it, Brian, because our time is up today, my friend. It is always an absolute pleasure having you on the show. Thank you for sharing your insights and expertise with us. And I'm sure you gained a couple of new fans out there, Brian. So for those people in our audience that said, you know what, I want more of Brian, I need more of his hot takes, and I need to see what he's up to, what's the best place they can go to learn more about what you're up to and what you and the team at Smashfy are up to?
So I'm active on X. My handle is Brian Hunjong, Brian, and Hunjong, Huonjong. I'm also active on LinkedIn too with the same handle. So you can look up my name on both platforms. And I run my own business called Smashfy. It's a Bitcoin investment and accumulation platform. The website address is really simple. You can just type in Smashfy, SMASHFI .me. Smashfy.me is the website address. So please visit and let me know if you have any questions. Leave any comments on the YouTube video if it's uploaded, and we'll chat.
Amazing. Well, it's always a smash and a blast having you on the show, Brian. So thanks again for joining us. Enjoy the rest of your week and a happy holiday season to you and yours, my friend. Appreciate you dropping in.
Thank you for having me today. Happy holiday for you, and maybe we'll see you next time again.
Absolutely. We certainly will. Thanks, Brian. All right, that is a wrap for today's episode of Roxom TV News, boys and girls. We'll be back tomorrow to wrap up this week of world news here at Roxom TV News. So make sure you tune in to us at our normal time of 8 a.m. Pacific. And we'll be back tomorrow with all of the top stories of the day. Until then, stay safe, stay informed, and always be sure to huddle on. I'll see you guys tomorrow. Have a good one.